And welcome back. Bruce Porter joins us now for this week's Dollars and Cents segment. First of all, thanks for coming in.
Good to be here.
We appreciate
Hi,
it.
Bruce.
Good seeing you
Good
as
to see you.
always.
Love your
All right,
shirt.
we're going to take a look at today's question. What's going on with the stock market? Yeah, I mean, everything's going. All right, should I be concerned? I mean, it seems to be centered in China. That thing is going volatile, but it's affecting everybody else.
Well, I tell you what. Here's what you got to remember: when you're in debt to someone, you're going to be a slave to that creditor. You're going to have to comply. You're going to have to do kind of whatever they do. So if you owe $20,000 on a credit card and they raise the interest rate, what are you going to do about it? You're going to pay it.
Right.
Complain, but that's about all.
You can complain. You can jump up and down. You go kick a cat.
Yeah.
But you're going to have to pay higher interest.
Right.
So anytime you're a slave to your debt, you're going to put yourself in a bad position. So now what's that do? Well, it's too difficult to try to answer in a short show.
Yeah.
So the bottom line is it affects our economy. So when we watch the fluctuations in the market like we're seeing right now, what we want to do is we don't want to get in a panic type mode. You got to understand in any given 20-year segment of the market, historically there's never been a downturn. So when you're evaluating what effect is this having on my money, because that's what we relate to. I can't relate to big computers trading in milliseconds, thousands of shares.
My
that
money
doesn't
right
matter.
now.
Right.
My money in my pocket, how much did I have on Friday? How much did I lose yesterday? Well, you only lost if you sell. If you sell low, you lock in your loss. So evaluate your priorities. Evaluate what's the purpose of this money that I have. And if the purpose is long-term retirement savings, then if nothing else, visit your asset allocation, which is the spreading of your asset. So if I've got $10,000, don't have it all in one spot or one segment.
Don't put all your eggs
Spread
in one
it
basket.
out.
Yeah.
Spread that out a little bit. Diversify. If you're already diversified, rebalance. Rebalance your allocation. Now, if you do that, you're going to be able to maintain some type of a discipline in your investment strategy. When you have a disciplined investment strategy and then something unforeseen happens like this, that's not a reason to change your strategy. That's a reason to visit it and then reposition it, but stick to your investment strategy.
And that would be, I would imagine, the prime time to visit with your financial advisor.
Absolutely.
Say, ask, do we need to change anything? But it sounds like you're also saying patience, in this case, is definitely a virtue.
Can't have a knee-jerk reaction.
Patience is very important. You cannot knee-jerk. If you blindly make a decision in a scary market condition, you got to remember there's cost to sell, there's cost to purchase, and you don't want to get hit while you're down. So I think you just have to reevaluate what's the purpose of this money, what's my goals and objectives, what am I trying to accomplish. Now, there's a lot of talk about the effect on 401ks. Well, if you're approaching retirement and still working, pay attention to your allocations. Don't be aggressively risky when you're within 5 years of retirement. That's when you need to start circling the wagons, bringing everything back into focus, keep it safe and secure, and these markets won't hurt you as bad. But if you're approaching your retirement and you're thinking, oh, I want to double it, I want to get more money, you're going to get burned if you're not careful. So we got to be careful about that. You look at market conditions right now compared to what they were a year ago. The Dow is down, the NASDAQ is down, the S&P is down. Everything is down. Well, okay, does that mean they're bad investments? No,
it's
that
really
just means we're in
term.
a season.
Yeah. So this is the time, if you don't have, we have about 30 seconds here, but this is the time, if you don't have a plan, any time is a good time to visit with a financial advisor and make a plan and think long rather than short, because you can get burned in that little short thing.
Absolutely. If you're going to jump, make sure you have a plan before you jump. And I'm not saying jump, because the worst time to jump is when you just lost money. Best time to jump is when it's at a record all-time high.
You're right.
Which is what we've been dealing with for several months, and many advisors, including myself, have been telling people, you need to evaluate, have I got enough,
And
then get out.
There are more adjustments to come, I know.